Alright guys, I know I'm going to have questions about this over the video I did about the BRRRR method. So I went ahead and just did the numbers. So I was discussing in the video about getting a $100,000 house, buying it for $100,000, and the loan would be $80,000. So it'd be a 20% equity for the loan, and 80% is how much the loan is, which comes out to $80,000. That's just for easy math. So the idea is that you want to buy a house for less than what it is actually worth. So let's say in this scenario, which this is what I've done in the past, I always try and buy houses for less. That way you automatically have instant equity in the house as soon as you buy it without touching it. So let's say the house was actually worth $120,000. Maybe they found it on market or off market. There's not that many great on market deals right now on the MLS, but they can still be found if you're willing to do a little bit of work. So let's say house is worth $120,000. They sell it to you for $100,000. You put $20,000 down, which is 20% down, which means you don't have to pay PMI, private mortgage insurance, and now your loan is $80,000. Well, that gives you a loan to value of 33% equity and a 67% loan. So out of the $120,000 value, you have 67% of it is the loan, 33% is equity. Okay, so that's the first part, that's the basic. So now you're gonna rehab it and refinance it. Let's say your rehab costs you $20,000, because that's what I said in the video. Let's say you're gonna put $20,000 in. Well, the house is worth $120,000. You put $20,000 in. You had put $20,000 down for the down payment. Okay, so right now you're all in for $40,000. All right, $20,000 for the rehab, $20,000 down payment equals $40,000. You only need to be in like 3rd grade math to figure that out. Okay. Well, after your rehab, it now appraises for $150,000. So it did appraise when you bought it for $120,000. Now, after $20,000 into the rehab, it appraises for $30,000 more. So now you have $150,000 value of your house. Your $20,000 got you an extra $10,000. Okay, so let's say you get renters in there, they take care of it, or don't, whatever, you can charge them for that later, and you refinance it a year later. This is going to be a cash out refinance. This is different from what you'd be doing just to get a better rate. You want to do a cash out refinance so that you can get all your money back out of it, or at least as much as possible. In this scenario, the house is worth $150,000 a year later. You were all in for $40,000. And because it appraises for $150,000, you do a 20/80, or it doesn't have to do with that, but most people will do a 20/80 refi, which means you're going to leave 20% of the equity in the house, and you're going to get a loan for $80,000 or 80% of the value. So if that house is worth $150,000, 20% equity equals $30,000 of equity. So you're going to get a loan for $120,000. Now that loan that you get from the bank when you refinance is going to cover the old loan that you had, which is $80,000, and it's going to cover the $40,000 that you had put in of your own money. You are now going to get all of your money out, and this is a very realistic scenario. With a little bit of looking, you can absolutely find a $120,000 house and buy it for $100,000 with a little bit of sweat equity. The loan, 20%, equity will get you an $80,000 loan. You put $20,000 into it. It can absolutely raise the value of it to $150,000 if you're going to do it yourself with sweat equity. And a year later, refinance, do cash out, 20/80. This is an absolute realistic scenario that anybody that is okay with their hands can do, or you can hire this out to someone, get a few different prices. $40,000 cash out gets you all of your money back, and you are into this property now for $0, and someone else is paying off your mortgage for you, and then you BRRRR and you do it all again. Go find another $120,000 house. All right. That's it, guys. Let me know if you got questions. Leave a comment if you got questions or you don't understand something, or you think it's a good idea, or you got better ideas. Great. Leave it in the comment section, like and subscribe.